If you could boil down all the wisdom from Warren Buffett, decades of it, into just one single piece of advice for investors, what would it be? Well, that's exactly what we're going to do today. We're going to find his number one warning, the one that could protect you from the single biggest, most expensive mistake most people make. Let's get into it. And here it is. This quote, this is the whole thing right here. It sounds so simple, right? Almost too simple, but trust me, there's a really profound idea packed in here. So we're going to break down exactly what he means by buying a cross-section of America, and maybe more importantly, why he says that right after you do that, you have to never listen to people. So what is this number one mistake Buffett is talking about? Well, it really just boils down to a huge misunderstanding of what investing is supposed to be. He thinks it comes from this dangerous illusion that doing stuff, being active, is the same as making progress. And this gets right to the heart of it. We live in this world where you've got trading apps on your phone, you see the stock ticker flashing all day long, and there's this constant pressure to do something. We confuse the ability to trade instantly with the need to trade constantly. But being a busy trader, as Buffett will tell you, is a totally different thing from being a smart investor. Okay, so why? Why do we all fall into this trap of always wanting to do something? Well, the reason is this powerful, almost invisible force that Buffett talks about all the time. It's what you could call the liquidity trap. Let's dig into what that actually means. So liquidity is just a fancy word for how easily you can buy or sell something. And, stocks are probably one of the most liquid things on the entire planet. You can buy or sell a piece of a giant company with just a few taps on your phone. And that ease, that instant gratification, it's a huge benefit for sure. But it's also a massive psychological trap. Buffett has this perfect analogy for this. He says, imagine you buy a farm. You can't just wake up the next morning and decide to sell it. It's a huge pain. It's slow, it's expensive, and that natural friction forces you, it makes you think long-term. But stocks, you can sell them in a second for basically nothing. That total lack of friction encourages the complete opposite mindset, short-term, jumpy, reactive decisions. And that's really the bottom line, isn't it? The reason people trade so much is simply because they can. The barrier to taking action is so incredibly low that we're always tinkering, always reacting to the latest headline or some gut feeling, when honestly, the best move is usually to just not move at all. And Buffett just puts it so bluntly here. All that activity, all that moving around, it feels smart. It feels like you're being a savvy investor, playing the game. But most of the time, it's just hurting you. You're racking up fees, creating tax problems, and probably buying high and selling low. It's not smarter. It's just busier. All right, so we've laid out the problem pretty clearly. We trade way too much because it's just so darn easy. So what's the solution? What's the antidote to this? The good news is Buffett gives us a really, really simple two-step plan. It comes right from that first quote we saw. Step one is to buy a cross-section of America. Now, for almost everybody, that just means buying a simple, low-cost S&P 500 index fund. You're not picking stocks, you're just owning a tiny piece of the whole American economy. Then comes step two, and this is the really hard part. Tune out the noise. That means you have to actively ignore all the things that are trying to get you to act. And that's the big question, right? It's one thing to say tune out the noise, but what is the noise? It's literally all around us, all the time. What specifically are we supposed to be ignoring here? The noise is everything. It's the daily news about whether the market is up or down 1%. It's the experts you see on TV telling you what stock is going to pop next week. It's the scary headlines in the financial papers. It's your friends, your family, everyone telling you, oh, you got to sell this or you got to buy that. And maybe the loudest noise of all is the one inside your own head, your own fear when the market drops and your own greed when it's soaring. And so all of this brings us to the final and I think the most powerful takeaway from Buffett's warning. It's about completely flipping the script on what it means to be a good investor. It's not about making these brilliant genius moves. It's about consistently avoiding the dumb ones. And this is really the whole thing boiled down. In a world that is screaming at you to do something, anything, right now, your greatest advantage, your superpower, is your ability to sit there and do absolutely nothing. Your patience is worth more than any complicated trading algorithm in the world. So that's the final thought I want to leave you with. When you really think about it, is it possible that the single greatest risk to your long-term financial success isn't the market or the economy or a specific company, but maybe, just maybe, it's the person looking back at you in the mirror